Hi, I'm Lonnie Moss. Welcome to Get a Life, where we break down life insurance, finance, and smart ways to build and protect your wealth. My first guest is Barry Bascoe, an expert in financial strategy who's helping people turn life insurance into a powerful asset. This is a conversation you don't want to miss. So thanks for joining us, and be sure to subscribe. Let's jump into the episode with Barry Bascoe. Thank you. So Barry, you and I met about 8-9 years ago for the first time on a conference in Puerto Rico. It was a conference. It was a top 100 conference, and we met. We took each other's numbers, and over the course of a year or two, I reached out because I wanted to make an introduction to some of my clients because of the level of expertise that I saw that you brought to the table. That was pretty much far and beyond what I was exposed to and had seen in some of the other advisors I was dealing with. And the thing that I like, one of the things I like most in your approach is that you always were methodical. You took time. You never rushed to clients. You always wanted to make sure that you did the right thing in working with somebody. And often you would take maybe 1 or 2 years before anything would come to fruition, and you were fine by that. Because it worked well. Just sort of, if you can elaborate on in meeting with people, what is your main what are some of your main focuses in doing planning, and what you feel that you can bring, and as far as the value that you feel that you could bring to a client that you're meeting with for the first time.
So that's a great question. I just actually was on a meeting with a client earlier today. He asked that same exact question. And I explained to him that I work with individuals who come to me for a multitude of reasons. Some come to me because they are very concerned about maybe running out of money during retirement. Others come to me because they're very concerned about potential lawsuits or divorces, and they want to find ways to protect their income. I have accountants refer lots of business to me when they're trying to increase the deductible expenses of the individual's corporation. And if they can do that in not a discriminatory manner, meaning if it's a pension plan, they would not have to include any other employees or participants. So if you were to dial it down into a nutshell, I would say everything dealing with tax type planning, not what accountants do, but strategically coming up with solutions to increase tax deductions and increase tax-free income, along with asset protection. And that encompasses multitude of different arenas. You'll notice I didn't say anything about investments.
These are very unique qualities that you bring that you don't often see. What kind of feedback? So after you do an analysis with a client and you go through the detailed fact find, often you'll charge a fee for the large amount of work that you do. And what is some of the feedback that you're getting, from your clients, good and bad? It seems like it's mostly good, but what kind of feedback do you get from the clients after meeting with you, talking to you, and seeing the level and the quality of work that you could perform for them?
Usually they can't determine the level and quality until they actually engage. Right. But when they leave the initial free consultation, which lasts usually about an hour to an hour and a half, they then can make a determination whether my services will be of benefit to them or not. And if they are, then they'll come back or they'll engage at that time. And that's when we start to collect the data, do the analysis, create the different models. And this could take anywhere from 6 months to 2 years, depending on how sophisticated and elaborate the client is with all of their various entities, if they have, or how simple it could be done in probably less than 6 months. It depends on the client.
So can you fast forward a little bit after the fact, after doing the 6 months, 1 year, 2 years of gathering information? Now you make the presentation, and you're showing your clients or prospects who become the clients something that they might not have seen before, and that's what I'm referring to. So what are the reactions that you're getting when they see, wow, I've never seen this level of expertise in all my years of working with other advisors, other accountants. So what kind of feedback are you getting regarding that after you make the actual presentation before they become a client?
I don't make a presentation until they are a client.
Right.
So
All right. So now they're
they
a
have
client.
to they have to engage, and then once we're engaged and they're now a client, then I start gathering up the information necessary for me to do the analysis and the modeling to be able to present to them. And basically, it's here's where you are today. Here's where you would like to get based on all of our conversations, which could take several hours depending on the client. And then here's how you get there, A, B, C, D, E, F. And it becomes an educational process for the client to learn all of the different options available to them. We never go in with a one-trick pony. It's always 4, 5, 6 different options that they can choose from because each one of them represents a different methodology. Some they like, some they don't like, and they get to choose which ones.
See, you had related to me a client in New Jersey. Many clients you don't see. You're doing a Zoom meeting, and you had met with one of my clients, and you had made the presentation to him. And that's the feedback like to get is after you do the fact find and you make the presentation, the reaction and the response of the quality of work that you do, where they see a huge transformation on what they can do by going ahead and hiring you. So, are you able to maybe relate an experience that you've had with a client where you did surgery, so to speak, on a client?
Well, once they've hired me and we presented, it's usually multiple presentations, and the feedback is usually, I've never seen this before. How come my advisors never discussed this with me? Why didn't they tell me this up front? I mean, it just goes on and on.
Not my guess is that so you're solidifying a great opportunity with they want to bring you on. They don't mind paying the fee. Often you charge maybe $5, $10, $20,000 to do a large amount of work. Maybe somebody may balk at doing that, but after they sign up and they pay the fee and you do the work with them, so can you role play and just like and maybe further expand on the on the presentation like they've never seen it before, and how much time does it take to implement a particular strategy, whether it's buying life insurance or doing some investment planning? Can you give an example of a good experience that you've had with a client and how you help them to improve to make sure they don't run out of money?
That's a very broad question because you covered 4 or 5 different arenas.
Right.
So if we're working with a client on their wills and trusts, almost every time it's why wasn't I told that I can do this? How come I didn't know about this? A lot of it stems around how to protect the assets when they pass down to the children. Some of it stems around how to avoid paying extra taxes that are not necessary. If I'm helping somebody with the sale of a piece of property, artwork, it doesn't really matter, business, and they have a large capital gain, we can help them avoid it. I recently had somebody that had a $5 million gain. He would have lost $2 million in taxes. Instead, we saved him $2 million, and we converted the $5 million into tax-free income. So now he receives $300,000 a year tax-free for 3 generations, 70 years. And so everybody's very thrilled about the planning that we bring to the table that virtually their advisors and themselves have not seen. If they're looking for tax breaks and they have a company and they're told they can't do a pension because they have too many employees and they would have to give away too much, we can show them how to do it without covering any employees and make double or triple the contributions that their third-party administrator never discussed with them. So, it's hard to state specifically what you're asking because it's a case-by-case basis.
Right.
And that's the reason why we don't charge for the initial consultation, so we can see just where we might be able to help service their needs.
So you are far from a insurance advisor, insurance planner. Because you're doing so many other things that go way beyond a simple sale of a life insurance policy. You've talked about 3 or 4 or 5 things that had nothing to do with about buying life insurance.
Insurance is just one arrow in the quiver, and insurance is a risk management tool, and it will definitely be looked at. We can do audits on the existing insurance to make sure it's going to last as they were originally promised,
Yeah.
to see if it's functioning properly, to see if it's going to be taxable when it should not be taxable, and then to help them either enhance their current insurances or help them find uh, a different strategy, maybe not even need insurance, depending on everything else we've done. And if it's needed, then how to purchase it in the most tax efficient and asset protected manner. Some states don't offer asset protection for insurance, others do. So, how can we protect the insurance and the values? How can we pay for it? Can we buy it deductibly? Can we use somebody else's money to buy it? So, again, it's just another arrow in our quiver in the overall planning. I don't try to segregate everything and say this is what you do. We look at it as a entire package and look at all of the aspects of one's estate. The question I would think you would want to ask me is, what do you mean by estate? And I mean, estate planning is literally 25% death planning, distribution, tax, and the other 75% is lifetime planning. Because if you think about your estate, you're alive a lot more than when you die. So therefore, all of the lifetime planning, which is the tax planning besides death taxes, the tax-free retirement income, how to pass wealth down to the kids, how to pass the business down to the kids, how to succeed the business, how to create proper structures when you have a partner in a business. All of those things come under the 75% of the estate planning definition.
Let me ask you a specific question. Getting back to life insurance, so can you talk a little bit about the value of a good permanent policy, the lifetime of tax deferral that you get as you accumulate money, and how you structure this large amount of money? It could be hundreds of thousands, millions of dollars, and how do you structure this cash cow to bring tax-free distributions over a person's lifetime, and then be able to pass that on, to their children or grandchildren as well on a tax-free basis? Can you talk a little bit about, the actual life insurance product and the value of that?
So, as you know, life insurance can be used for a multitude of reasoning. Some of it could be used for simple thing as passing wealth down because it's a small estate and they want to have a legacy. So that doesn't impinge upon them using their assets while they're alive, and the kids still get something. They also have temporary need for life insurance, term insurance. People understand that term, and that could be good for 5 years up to 35 years, depending on health and age. And it's basically a temporary renting of the insurance. If you think about a real estate, you rent an apartment very cheap, but the lease is up at some point and you have to start all over. Or you can buy a house and now you own it. It's more expensive because you have a mortgage and interest, but you never have to give up the equity that's involved. Term insurance is the renting of the insurance. If somebody's looking for permanency and they want to have something that's going to last their lifetime, which could be today's world, 95 to 105. I've got 4 or 5 clients that are over 100 already. Then we want to have something that is of a permanent nature. Again, it could be used for payment of taxes. It can be used for legacy. It can be used even for buy-sell purposes on how to structure a clean buyout and then retain the benefits for the survivor. The thing I think you're asking about is, can you use life insurance to create an income stream? And the answer is, believe it or not, life insurance is the only government sanctioned tax shelter today. And many, many very, very wealthy people look to insurance to augment their other assets, diversify, create tax benefits, as well as very large investment gains. Because insurance is similar to a house where you have equity, as you know, you can borrow from your house. And when you pull that equity out, there is no taxation on it. Well, it's similar with life insurance. If it's got value in there, we can create large amounts of internal cash value within the policy, and that could then be either withdrawn or loaned, all tax free. And upon a death, the loan does not have to be paid back. It just reduces the overall death benefit. If one does not make it through retirement, then there's a self-completing death benefit, which acts in replacement of drawing down the income, still tax-free. So the survivors will get the tax-free income vis-a-vis a death benefit.
Right.
Hopefully that answers your question.
Yeah, it does. And what has been the attitude of many of your clients that have been with you for 20, 30, 40 years time, seeing the impact of having a simple life insurance policy where they can put away 10, 20, 30, 40, 50, $100,000 or more per year and have the impact of the growth of that policy over their lifetime and take incredible amounts of tax distributions way beyond the basis of what they put into the policy. What has been the attitude of some of your clients who have seen that?
That's what's so exciting to them because, as I said, it's a government sanctioned tax shelter. They don't have anything like that. There is nothing out there. And it provides them all of the tax benefits that they cannot get from their pensions, their CDs, their money markets, their munis, none of that. It's the only vehicle that provides those benefits. So over the years, as their benefits grow 2, 3, 4, 5, 6 million, of many times it's not even their own money that funded it, could be other people's money that funds it. They now have the opportunity to start withdrawing. I have many clients that are withdrawing 200,000-300,000 a year, completely tax free. So they're excited.
Yeah. So do you see this? It seems like this concept is like a secret. Would you say that most people are not even aware of the power of what this product can do for them?
I don't know about most or least. I know that those that I'm working with have an idea, but they don't understand the intricacies and the details of how it works.
Yeah.
Once they understand that, it becomes very simple for them and they can just move forward with that.
Yeah. What is your feeling about the concept of live, die, or become disabled, which is the components of a life insurance policy? Can you elaborate on the concept of those three key elements of a typical whole life insurance policy?
So what you're taking with this permanent policy, whether it be whole life or universal life or variable life or index universal life, let's call it permanent life because they all work exactly the same way from the question you're asking, is that they're available during lifetime if you so choose to retire on, borrow from, live off of the cash value, have the cash value pay the premiums in the future, multiple things that you can do during lifetime. As far as death, there's a death benefit component that will be paid either to your creditors, your spouse, your children, your estate taxes. Again, multiple reasons for a death benefit. And lastly, if you should become disabled, you can actually have an independent policy for disability purposes, or you can utilize what is known as a waiver of premium, and you have that pay the premiums going forward so that you don't lose the policy because you're no longer earning any money and you don't want to drain down your assets to pay for the policy.
And you could still take the same distribution from that policy, whether the insurance company is paying the premium or not.
That is correct.
Yep,
that is correct.
Can you talk a bit about your network of other professionals that you tap, that you go, estate planning attorneys or accountants? So do you have can you talk about your network of individuals around the country that you could talk to or to refer to continue the important components of bringing them in to help you to complete some of the planning that you need to do for your clients?
Sure. So I've been in this business now since 1972, and currently I am in 45 different states and 6 countries. So I have a network of advisors, professionals, literally around the world. So wherever the client is coming to me from, whether it be within the United States or without the United States, I can certainly help them with my network of individuals. Or if they're in the United States and they're looking to do something outside the United States or already are, we have the ability to bring in the experts to help them out with that.
So here you are at this stage. I mean, clearly, I know that you do from what you've told me, what I know, you're not working for money. You make a good income, but it's never about the money. It's what you've always told me. And you talk to a client that makes $50,000 a year or $100,000 a year, but you talk to a client that makes $50 million a year. And I respect that you talk to anybody that has a genuine desire to get the help that they need, and, so that's one of the things that I like most about what you do. That didn't matter what level of income that they came from. You're ready to help anybody. Is my thought, and what you've shown.
It would be true since almost all of my business is referred or introduced to me vis-a-vis estate or income tax attorneys or accountants. I don't want to tell them, oh, I only want a certain level of client that you should send my way. I want to be able to help all of their clients. And so whomever they send my way, I'm able to help, whether it be a smaller client of a net worth of, 1 to 2 million or a client worth 300 or 400 million. It makes really no difference. And they like that because they know I'm not trying to cherry pick and only work with the wealthy. I'm really wanting to help them help their clients. And that would be the same with any client that refers me a friend or a relative or a business associate. It would be the same thing. We would work with them and help them accomplish their goals.
Yeah, and I could back that because it's been the same in the introductions that I've made. You never ask the question where they're from. You are always ready to get the job done, and that's why I continue to pick up the phone, to call Barry, and because I know that you'll do the right job, you know, wherever they are. Going forward, where do you see the future for estate planning? Where do you see the future for insurance planning? So what do you see as new things with AI, or do you still see the inherent value of the 100-year-old permanent policy as being a excellent vehicle to continue to save money?
I don't think either of those things are going away as long as we have a government that has a deficit of close to $40 trillion and a need for taxes. If insurance is the only government sanctioned tax shelter available, then people just need to learn about it and how to utilize it to its most efficiency. We have banks that are available to help fund things, just like we fund mortgages and schools. Insurance is just another asset that can be funded using bank money. It can be funded in multiple ways using profit sharing, pension money. As a matter of fact, a lot of people are not even aware that their qualified IRA is going to lose minimally 35 to 70% to the government. The government waits for people to die and pass on their IRAs because they gave a tiny little loan at the very beginning called a tax deduction to collect a huge amount of taxes at the back end. Insurance is probably the best vehicle to replace that loss. I just did a client who had a $5 million IRA. Their kids were going to inherit only $1.5 million. And I say only because they had to give the government $3.5 million from their IRA. When we finished the planning, instead of giving their kids $1.5 million, they gave their kids 18 million, 100% tax free. And that was an accountant who came to me for help on their own IRA. So insurance is not going anywhere. It's there to help people in multiple ways to replace the widows and orphans that it originally started out doing, right down to tax-free planning for income purposes.
Yeah, I was on a boat ride, a ferry ride in New York City recently. I like to talk to people, and there was a young couple from another country, from Venezuela, spoke good English, full citizens in America. He was an architect, and I asked him up front about have you done any insurance planning? Do you own any life insurance? His two babies were sitting on his wife's lap, and he said to me, I don't have any life insurance. So what do you, and I see that everywhere, or I've been
Right.
meaning to get around to it. So what message can you give as far as where the focus should be on what they should be getting done first before they do anything else to make sure that the people they care about most are taken care of, their wives and their children, or the husbands and children.
You just stated it. That's exactly the message. So it needs to be presented in a question format. How much do you love your family?
Yeah.
What happens if you're no longer around? Let's pretend for a moment you're gone tomorrow. How did they survive? Does your wife all of a sudden have to put the kids out to pasture while she goes to get a job? I mean, it's just questions people have to start thinking along the lines of what if, as opposed to where am I going to get my next, Louis Vuitton purse or whatever. They need to first think about their families. And then secondarily, they need to think about their businesses. What happens if I pass? What does my family get from my business? Who's going to take over? Who's going to run it? Will they get anything from it? Will my partner's family take it over? I mean, there's so many questions that go on from there.
Yeah.
So it's just asking the right questions to help people understand what they may be missing. But the person has to realize it themselves.
And that's why our business is so important. And how do we make a meaningful impact so people can hear the message? And it's one thing for us to talk about it, but unless they hear it and absorb it and see the reality and the impact, they're not going to move. But that, I think, gives us the incentive to make sure we're giving the message is being heard, so they can move on and make good decisions.
I agree.
Well, thanks for tuning in to Get a Life with Lonnie Moss. I hope my conversation with Barry gave you a new way to think about life insurance and building financial security. Don't forget to subscribe. We've got more great guests and real talk coming up soon.